and welcome to another episode of the Trade Finance Distribution Initiative podcast. I'm your host, Doris Kononowicz. Now, today I have a very exciting episode and discussion lined up for you. Joining us is Christoph Gugelmann. He's the founder and CEO of Tradeteq, a pioneering platform that's transforming trade finance through trade receivables securitization. Now, the Trade Finance Investor Day is just a week and a half away, and Christoph will be presenting a live demo of the Tradeteqs technology, which unlocks access to trade receivables for structured credit investors. We'll be deep diving into how this technology is reshaping the trade receivables securitization space, that's TRS, and what investors can look forward to in the future of the space. Hello, Christoph.
Hi, Doris. Thank you for having me.
Now, for those of you who may not know, Tradeteq is the founding member of the TFDAI, and this consortium now has over 100 members. So there might be some people who are curious as to what that relationship has grown into. So, Christoph, can you touch upon how the evolution of Tradeteq's relationship with TFDAI is and how everything has played so far on?
Yes, Doris. It indeed has grown over the years quite significantly. Initially, there was a need for banks to create more standardization around the trade finance distribution, and the founding 8 bank members, that's really where it all originated from a few years ago. And then from there, a lot of other providers have essentially joined the initiative, institutional investors, but also technology providers. And we are very proud to be the operator of the initiative, and we're sure we'll be able to grow it from here even further.
So basically, this is my bring your boss to work day for me, having you on the show today. Well, now, one of the standout features, I think, for Tradeteq is how it unlocks access to trade receivables for structured credit investors. Can you break down how the platform facilitates this and what kind of investors will be benefiting the most from this?
Yeah, of course. So if you think about the risks in trade finance, the usual risks is people always look at credit risk, dilution risk, fraud risk, but there are other risks as well, such as the operational risk, and of course also the utilization of these facilities. And if you want to go into the structured credit space, then of course you need junior investors, you need senior investors. And it is only possible for a junior investor to come in if the risks they are assuming are actually predictable. And credit risk is definitely predictable because we have the ability to look at historic data. We have data often around dilution. We have data around market risks. But it is not so easy to make an estimate of the utilization, because utilization can be driven by anything, cheaper financing alternatives of a bank, or it can be driven by seasonality in the business. And therefore, there is a need that technology is providing a solution that can plug into large networks to create sustainable flow of transactions, but also to reduce the operational risk, or basically eliminate it to the degree possible, but really reduce it to almost a negligible amount, such that it becomes predictable. And this means we are able now to create a market where equity investors can come in and are comfortable to take the risk. And that then drives also access for securitization investors.
Now, we'll talk a little bit more about risk mitigation, because a lot of what you've said about this is quite fascinating. Now, let's just touch on the theme for this year's Trade Finance Investor Day, which is unlocking access to ABS. This is something that has become quite prevalent in trade finance space. Why do you think ABS is gaining traction now? And how does Tradeteq streamline this TRS process for trade finance investors?
Yeah, if you look at the structured credit market, and if you take all the agency business away, then we have a structured credit market of around 3+ trillion, of which, again, if you strip out the mortgage-backed securities, the non-agency mortgage-backed securities, there is still a very significant, kind of like commercial activity that is all subject and got securitized now for for many decades. But in trade finance and trade receivables in particular, I wouldn't say it's entirely absent. There are transactions, but I would be surprised if these are significantly more than 10 rated trade receivable securitization transactions out there globally. If I mean rated, then these are publicly rated. There, of course, is a larger amount of privately rated transactions. But as you can see, there is a dislocation in the market. Receivables is the largest commercial activity. Everyone deals with receivables. Everyone who does any commercial activity has receivables in one way or the other, and yet there is hardly no access really in the structured credit market for these instruments.
In spite of what everyone's talking about bridging the trade finance gap, we find that it keeps growing. It's somewhere now at $2.5 trillion. And, I think technology like Tradeteqs, really works to, help close that gap, particularly for SMEs. So we want to know how the platform is supporting SME-focused originators and helping them gain access to liquidity.
Yeah, I mean, it's the whole trade finance and the receivable market is always structured around the big names, the big buyers, the big companies, because they get an abundance of access to liquidity, and then also they will help some of their core suppliers to get and share into that same trade finance liquidity, which is almost entirely coming from banks. So that's a supply chain finance business that we have out there. On the receivable side, where we are now more centric around SMEs really having receivables and want to get them paid now rather than in 90 days, it's a very different story. So we often speak about tail suppliers that are underserved. And as you know, once you are not kind of like bankable, that doesn't mean you are a bad credit risk. That just means you do not get access. You're not important enough for a bank. And then very quickly, your funding levels are in a very different zip code. So now you need to either get senior unsecured loans, or you will need to find alternative lending providers, or you will need to actually fund with your own equity. And that is the reality for the overwhelming part of SMEs out there. And it is quite painful to see, because looking at them, they provide and produce goods that are maybe even similar or identical or even better in quality than what bigger companies produce, but yet they have no option to get paid early, whereas all the big or larger companies are getting paid early. I'm not making this a story against large versus small companies. Also, the large companies actually are very happy if the smaller companies get access to financing, because that strengthens their supply chain. And it's nothing more important for a company to have, of course, on both sides of the equation, have strong buyers, but also a strong supply chain.
No, absolutely. This is something that resonates with a lot of SMEs and a lot of technology providers in this space. I remember speaking to Pranay, and he said exactly the same thing. Manufactured, working with SMEs who normally no one would have ever heard of, and they would not have been able to, think about getting their financing and all the legal work done on one platform. So, this is one example of the way that, you can actually reach out to a broader audience here and help them bridge the trade finance gap. All right, let's go back now to risk mitigation, which you made a very good point earlier on. We know that this is one of the biggest concerns for institutional investors, especially when dealing with structured credit products like TRS. One of those problems is fraud. Yeah. So how does Tradeteq mitigate credit risks, potential financial fraud, and receivables dilution particularly?
Yeah. So that's quite a few. So credit risk, I think you would always, in all of them, you would try and look at obviously your counterparties to start with. That's critical, because if you have sound counterparties, then that already helps. And credit risk can be mitigated, not just looking at the numbers, but also by using credit insurance. And we apply a lot of credit insurance on the transactions that we are issuing. On dilution, it's looking at the history, but then also making sure that there is enough structural subordination, we often call it, which is the deferred purchase price mechanics that do mitigate against often a multiple of the historic dilution track record. In fraud, it's harder because fraud, obviously, if you just try hard enough, then anyone can defraud anyone. But you need to put the hurdles as high as possible. So having a large corporate, a multinational corporate, and having a small supplier colluding with each other to defraud you on a small invoice is less likely than having two small companies, kind of trying to collude to defraud on a larger invoice. So we're looking at structural ways, and where we can, we would also look at having a third party involved, such as a logistics provider, or having another marketplace provider that is essentially using us in an embedded lending infrastructure and can provide us with commercial data. So this way we have more transparency and more visibility. And then finally, you can always work with legal language. So we're looking at certain recourse language, such that if there are defrauded invoices that we find someone to make us whole, that creates further incentive to all sides to not make it happen. We had an excellent track record. We have done $3.6 billion worth of notes that we issued, and within these notes, these instruments have revolved very often. We had fraud cases, but we have managed to get every single penny back for our investors. These were very, very rare, and through all the protection mechanics that I described, we were able not to create any losses for any investors related to fraud.
So it's tried and tested.
That is correct, yes.
All right, let's go into another big pain point. This is market exposure risk, whether it's due to fluctuations in the market, the interest rates, currency exchange, commodity prices. It could be a problem. And secondly, operational risk, which could be maybe due to potential loss of, inadequate internal processes, or even system failures. So how would Tradeteq address these sort of risks? And do you have any safeguards that are in place to help investors mitigate these risks?
Yeah. So you mentioned a lot of different risks here. So we try FX risks. We try wherever we can to keep FX positions segregated. So not to basically avoid the need to work with derivatives. Unfortunately, there is no perfect hedge with derivatives for trade finance exposure. As such, we try to avoid it where we can. Interest rate risk, I would say this is quite limited, the risk. Of course, there is interest rate sensitivity coming from the underlying base rate, but a lot of underlying corporates, they would have more of it's more as a servicing business, and if they accept a 50 basis points discount per month on invoices, then those 50 basis points will be less likely to fluctuate very aggressively in relation to interest rates. I think the interest rate fluctuation really comes more for very large ticket size supply chain finance transactions, more kind of the stuff that banks would underwrite and get on their balance sheet. So utilization risk, I think you mentioned. Here, it's important that technology provides access to multiple sources of origination, not just relies on one. And this way, we are able to have to be able to substitute underutilized exposure. We also work with legal language, such that investors, of course, if they have unutilized transactions, that they are in a position to also require their money back. So these are some of the techniques used. And I think where we shine the most is undoubtedly the operation risk. Here, that's why we have built this whole infrastructure. We are able to reduce errors because we know what's in play at all times in a trade receivable pool, and are able to run real-time filtering processes, but also able to report on exposure all the time. And this way, we pick up anomalies as they appear and can immediately react to it.
That's amazing. Now, before I let you go, Christoph, at the Investor Day coming up, you'll be showcasing Tradeteq's platform. Could you give our listeners a preview of what they can expect from your demo and what key features and functionalities that you'll be highlighting?
Yeah, sure, of course. So look, we have been really focusing on the transaction servicing. These were unitranche deals, and we have done a lot of those. In fact, actually, we are just about to close our 100th note program, which we're very proud of, and the team has done an enormous job, to get all these notes out there and done with and thank you, of course, to all our customers for all the trust. But there was no real subordination in there. Now, having the technology, and I mentioned operational risk and also utilization risk, is one of the biggest constraints for investors to actually assume that equity risk. But because we have it and we have it, kind of tried and tested, we are starting now to also provide subordinated capital to investors, and that is really an augmentation of the customer value proposition. Since many of our pension insurance customers, what they really want is they want not just something where they isolate the credit risk as much as possible and kind of get subordination for all that tail risk that we discussed, but at the same time, they're also looking for exposure that is optimal from a regulatory perspective, attracts the best possible solvency treatment, and I think with this next step, we are able to, move much closer to this target.
That's amazing. For our listeners, don't miss the opportunity to catch Christoph demo the Tradeteq platform live at the Trade Finance Investor Day on the 11th and 12th of this month. Thank you so much for your time, Christoph. It was really lovely to enjoy this teaser, and I can't wait to see your presentation on stage.
Thank you, Doris. Yeah, looking forward to the day.
All right, sadly, this is the last of the pre-event podcast minis. I just want to say a big thank you to everyone who has taken time to watch or listen to the series. A big special thank you to all our previous guests, Billy Sebel, the Executive Director at XDC Foundation, Richard Wolf, Executive Director at ICISA, Pranay Srinivasan, Founder and CEO of Manufactured, Moritz Hale, Director at Emerald Capital, Nick Stainthorpe, Partner at Reed Smith, Amparo Garcia Flores, Managing Director, Securitisation, and last but not the least, Christoph Gugelmann, Founder and CEO of Tradeteq. This is Doris Kononowicz. Thank you so much for listening, and see you hopefully at the Trade Finance Investor Day.